All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So last week we talked about kind of this uptrend here in the market, and as of Thursday, we did break that. So spiders here finally getting a dip, and we've been kind of talking about that for the last couple of weeks. So kind of give the market the upside bias as long as trend is holding. And, although we were looking for kind of a pullback in October and almost had kind of given up on it. And then late this week, we got a very nice outside move here on the S&P. You can see the spiders here, decent uptick in volume, nothing major, nothing I would call heavy distribution by any means, but definitely some selling here. What was the catalyst? Well, we had a loaded week this week, right? So we had a lot of earnings, big tech coming in and out. We also had jobs all week long. We had PCE on Thursday, but really the big catalyst for this decline was Microsoft, right? So Microsoft earnings, really not the greatest. Their cloud revenue kind of dipping a little bit. And you're going to see here, decent gap up on Wednesday. We also had earnings from AMD on Wednesday as well. A lot of things pumped into that. AMD, Microsoft, Meta pumped a little bit into its earnings. That was in sympathy to Snapchat. But really what it was Meta and Microsoft kind of taking that hit on Thursday. And if you take a look, Apple went down with Microsoft on Thursday, then reporting earnings, and that was down. And actually sliced this trend line here and basically closed right on it on the weekly. So we'll give it the benefit of the doubt here. But really, if you just take out Apple and Microsoft here and just say Apple's back to 225, 230, and if we put Microsoft back at where it was before earnings, 430, you'd probably be back at 5,800 on SPX. So a lot of it was accounted for in those two companies. We look at Amazon reporting yesterday with Apple. That's just off all-time highs. Google reporting earlier this week, that had a nice gap higher. It did pull back, but it's held the gains for the most part. It did trigger an inverse head and shoulders here, and you can see the measured move taking you back to double top potentially. So really a lot of it coming from Apple, Microsoft, Meta to a lesser extent. I think Meta's sell-off was related to Snapchat, and the reason for that is you can see Snap posting earnings a day before Meta, and they had increased some of their ad revenue. Meta is a sympathy play to that. It gapped up on Wednesday and then couldn't hold the gains. Their earnings were actually okay. They came in pretty much in line. But sometimes when the market gets something priced in, it takes a lot to wow the market, and you can kind of see some profit taken there. So big tech, I would say outside of Microsoft and Apple, really did okay. Remember, we had Tesla the week before. That's gapped up and that has pulled back, but it's still holding a lot of the gains. We had Netflix 2 weeks ago. That's still right off all-time highs. So we're seeing decent earnings here for the most part outside of those two companies, and that did take the market down. Now, there's also another headwind here as well, potentially, and that's in regards to Iran. So Iran talking about, they're basically threatening to attack Israel, and that's a little bit of a headwind here. That's kind of been, to me, I look at crude here, and this has been telegraphed. They've been talking about it really all week, and it may happen over the weekend. But we look at crude here, red today. Look at some of these defense stocks. Lockheed, red today, actually been selling off. RTX, selling off, and Halliburton at 52-week lows. So I don't think the market's too worried about that. Just worth mentioning, though, because it is likely something does happen over the weekend. But again, I'm just not seeing it here in the crude chart. But we do have a lot going on here. Next week, election, right? Big deal. And we also have the FOMC, and I believe it's the the second time ever that the FOMC has been in the same week as a general presidential election. So there's a lot of hedges. There's a lot of downside risk here that has been priced into the market, and the onus is now on the bears to really do some damage here. You did get to the 50 moving average. We got a little bounce today, more of a dead cat bounce and everything. But right now, this is kind of the big line in the sand to me, is right around 56.75 on S&P. And maybe a little bit lower, 56.50, but bears got to do some damage here You did break this upsloping trend line, so that's good. But there's, the way that event volatility works, and what I mean by that is, we know about an election, we know about the FOMC. There's puts, there's downside protection bought ahead of time, and unless downside is realized in a big way, those hedges get closed and or they decay in premium, and that can put upside pressure on the market. So you're going to need a big catalyst here for bears to continue some downside. That said, they got started, right? They definitely got it started here. We can see volatility definitely upticking here. Higher lows in the VIX. I wouldn't rule out a vol spike next week, but right now, we'll just say near-term downside here is, right into this area. So 56.50, 56.75. If you follow the spiders, right in the 565 area. So that's what we're looking for here. If at any time the bulls can get us back above even like Thursday's high, but really 5,800, I think that there's just too much, there's not enough damage done. And I think that the bulls could run away again. But that's what we're looking at here. Those are the big stories this week. We had non-farm payrolls today, and that was almost an afterthought given what happened with big tech earnings. And we only added 12,000 jobs. So there was 90,000 expected. Now the hurricane and the strikes had a lot to do with that, but that's a big miss. Now what I want to talk about though is the bond market is calling BS here. And what I mean by that is take a look at the ZB here. So the 30-year note just getting pounded, 2-year note getting pounded. If we look at 30-year yields, this is still on breakout here. So bond market not wanting to quit despite a massive miss in jobs. So I think bond market may be calling BS on that. And look, it doesn't matter who's elected, they're going to continue to spend money. I think we passed the point of no return, and that's been my base case for a while here. I also think that, based on what I'm seeing, a lot of people are trying to call the bottom in TLT, and a lot of people are trying to bet against yields here. And I think that we have a little bit higher to go, and I think we see yields a little bit higher into the FOMC, and then perhaps we can get a pullback there after a pivot. But right now, that's the big headlines this week. So again, those are the levels on the S&P, QQQ, again, breaking this trend line. You even had a bit of a, let's use the NQ. So you can see it clean, nice and clean there. Rising wedge breakdown textbook. And we'll see if we get continuation to the downside. I still think there's a little bit of daily chart support at 480 on the Qs. But through that, then we can start talk about lower levels. But definitely a little bit of damage. I will say the Qs did outperform intraday today on Friday. And if that continues, that's a positive sign. You want to see the NASDAQ leading. And we did at least see that today. IWM, again, still has a ascending triangle look. We did get through this one. So there was a trend line here last week. You're going to notice we did break that. But we still got one right here, and that definitely coincides with the 100 moving average. So that's what I'm going to follow here. Right around 215, and if that can put in another higher low, I think that can break out. So onus is on the bears to continue to do damage. The Dow here, again, we talked about this last week, so there was a little bit of a warning. Closing below that 423, 425 area. And we did that again this week. We did manage to close above last week's low, so we held that on by a penny or two, but it's still 2 weeks below that level, so possible failed breakout on watch for the Dow. SMH here, again, a little bit of weakness. Looking for it to get back to that 200 moving average, maybe to this trend line. Big story this week, SMCI, again, their main auditor basically resigned. So it looks like the fraud claims are legit, and I think this is going to $20. So this is how euphoria ends, and a lot of the time euphoria is accompanied with fraud. If there's a big headwind here for the market, it's that this company is one of the biggest customers of this company. And NVIDIA here you can see stalling out at double top. Nothing broken, it doesn't look the market's too scared or anything. Not seeing a huge, decline on huge volume, but, we'll see. We'll know more about this story soon. And by the way, speaking of chips, there's a reason why I've been talking since June about not chasing chips, right? Here's the high in the SMH in June. We're still below that. And what did I say to get into instead? Cloud software. This is still just off of all-time highs here. Cybersecurity, same thing. So this rotation trade has worked out very well. Again, if you think the bull is going to continue, but you think chips are bloated, which I do, it's got to go somewhere. And it's been going into this. Really, the only names that have held up really well in the AI space or in the chip space are Broadcom, NVIDIA, and TSM. We look at, Qualcomm, way off the highs. Micron, way off the highs. Intel at multi-decade lows. AMAT off the highs. KLA off the highs, right? So chip space has not done well here outside of really 3 names. So I continue to like cloud, and we'll see. I think, dips could be bought in this too. Unless, again, unless the bears do some really big damage next week. I think this can still have higher prices. Anyway, Dow Transports, again, green week, right? So Spider's down and Dow Transports up, so not a bad sign. And 16.6 is still resistance. All right, so let's just quickly talk. We talked about rates already, but we'll just look at them really quick. 2-year, again, that's above our critical 4.1 area. And there's not really, there's no liquidity here to fill, so we can go right up to 440 if they want to. At this point, I think the Fed jawbones it down. Why? Because your Fed funds rate is 4.85. And if your 2 years at 4.4, that means the Fed's not cutting. Right, it's just that simple. 5s inching up. I could see, 4.35 to 4.4. 10s closing in on a breakout here. Maybe 4.5. And 30s, I think, can go to 4.7, maybe 4.75. Remember, this touched the 20 moving average today and closed at the highs of the week. Bull in, sidebar, bull flag. So yields just continue to bid. And yeah, Lynn Alden says, right, nothing stops this train. And I think we passed the point of no return. I think we issued out $1 trillion in debt in over the last 45 days. And nobody cares. But anyway, home builders here, were they kind of looking at that? Remember, I talked about this a week or two ago. Said breaking below that 120 area on a weekly. Maybe home builders starting to figure that out. They did, manage to save the 20-week moving average on the close this week. So still hanging in there. I just want to see that stay above 111. VNQ did roll over, though, finally. I think that's got to go test 92. So lower highs confirmed, lower lows confirmed. But looking at the weekly, again, you're just tightening. It could be a bull flag. Let's just say we don't go down, test the weekly 200, and then, pop right back up. So jury's still out there. By the way, a lot of things have similar patterns, like XLV, healthcare. Not a bad weekly close. Consumer staples. Tightening, possible bull flag. XLF, again, basically a flat to down week. I won't make too much out of that. That's still okay. KRE, again, actually a green week. And it's kind of just hammering on resistance here. So that's still holding up. HYG, for what it's worth, did come in. I just want to talk about that really quick. It's off the highs. There's some support at 78. So I'd watch for that. Right now, credit spreads are still very tight. In fact, as tight as they've been since 07. They did uptick a little bit today. One thing that may be a concern, and it's funny how this stuff lines up, but one thing that may be a concern here is reverse repo. That's basically down to, it's basically down to 0. Well, okay, not 0, but it's close. So SOFR spreads starting to widen a little bit. We haven't seen it in credit spreads. We did see HYG down a little bit here today. It's something to monitor. Okay. Let's not throw ourselves off a cliff yet, but let's keep an eye on that. Anyway, broker dealers did finish off the highs, but still, I believe, a new weekly closing high. Yep, still green on the week. Oil we talked about. I still think the lows are in. unless a macro event is triggers, that's always a possibility, but I still think we do need to get us above 72 to confirm a third higher low. So that's resistance right now. That's where we were before we gapped down. Below 69 would keep us vulnerable to 67. As long as 67 holds, I think we're good here. Energy earnings, XOM today, gapping crap. I still really like, I think the big picture is fine. I mean, this is still a big monthly pattern here, looking for a huge secular breakout. Chevron had a good reaction today, and Conoco held most of the gains. You can see XLE though, I talked about $90 and it just didn't quite make it back above. I think that these start to rotate after FOMC. So an election year, a lot of these I guess pair trades, if you want to call a lot of these like certain trades, rotation trades, tend to end around that time, around the early November. Again, we got an election coming up. This is around the time XLE bottomed last time around. I think that's where it happens. I've been saying that for weeks. XOP, same thing. OIH, same thing. We did get out of that falling wedge though this week, although it came right back in. Maybe one more divergent low there. Speaking of rotation trades, I think TAN, this is a trade idea. You got a big falling wedge here. This is solar, by the way. Big falling wedge here that's usually breaking bull. Wall Street is priced in a Trump victory. So that means that if he wins, downside here is already factored in for the most part. If he loses, right, you could see a surprise. So I think that's an interesting idea. Not financial advice, just something to throw out there. We also have on the docket, big bill in Florida here, MSOS giving a lot of getting back a lot of those gains this week. So not good, not in good technical position. But it's all going to come down to that Prop 3 vote in Florida. If that vote's yes, we could see 50 to 100%, maybe more. No? Well, then thanks for playing again. All right. CCJ and uranium pulling back here. That's got to do some backing and filling. URNM. Really giving back a lot of those gains. I did close my URNJ, or my second half of that, so made money on the trade. And I'll be getting back in soon. But that did pull back here. It went into a big weekly level, right? This big pivot here, it needed to pull back there. We still have strength, I believe, in, Alclo and SMR. These guys are still, they're off the highs, but they're still on a rampage for now. Nat gas contract roll, that is down to basically the year-to-date lows, or the 52-week lows. I still think there's a good chance that this bids up into November, or into the end of November here, but not sure where this current low is. But usually the way it works is nat gas gets a bit into early mid-October, falls, and then it gets another one in November. So we'll see if that works out here, but definitely not a great week. And obviously the Z contract at a new low, so we'll see. I just don't know where the low is. And once I see that, we can look from there, but no interest in it right now. Dollar index still holding up again, looks a lot like yields. Trying to make a bull flag here, back to the 20 MA. I think this can maybe go to 105, 105.50. That would be a back check to this big trend line and this trend line as well. Gold here showing a few signs of slowing down. So we were able to make a new high this week, and we took out that reversal bar high. Again, remember I said there wasn't that much volume behind it, but the high only lasted for 2 days, and then we rolled back over. And we had another high volume sell yesterday. So we might be losing a little bit of momentum here. Again, RSI kind of showing that. And it's not perfect. Now, RSI can show declining momentum for a long time, so just don't make too much out of that. But again, we are going to the FOMC. We've pumped all the way into the FOMC. So, if we continue pumping, it's probably, getting time for maybe a pivot, a correction. I still have a level at 28.50 on this. So if we get a euphoric move on FOMC, I think that's probably going to get tagged, and then maybe you could get a high there. Maybe you could get a low in bonds, maybe a high in the dollar. So I'm looking for this convergence, looking for a lot of things to rotate, a lot of things to switch this week. Silver, backing off again. We hit target. Been talking about 35 for a long time. It got there, it hit, so it is pulling back now. Is it the end of the world? No. I mean, you look at the big picture, this is just a big monthly, I mean, you could call it a cup and handle, whatever you want to call it, it's an accumulation. And we broke out, monthly 20 MAs right here. And, you know, if we consolidate, remember I said this for 7 months about Bitcoin, right? You know, if the monthly 20 MA just catches up to price, right, it can act as fuel. So just look at the big picture here, right? We broke above this area. We've been below that since 2013, and we're above it. When do these big pivots here? And I said, you know, over the last couple of weeks, you don't want this to pump big anyway. Like, you don't want this going parabolic, because then you're going to get what? You know, one of these, right? You're going to get. So bull market, slow and steady. GDX off the highs, SIL off the highs too. That's fine. Platinum hit our resistance level. We talked about that. Perfect. And 1060 right there. It is backing off. You bulls want to see a higher low here to this pivot. Palladium hit my resistance level at 1250. I warned everybody to, you know, maybe book gains or do whatever you need to do at 1250. And it is backing off of that. I still have a position in this. It's deep in the money still, in case you were wondering. And I wouldn't be against adding it back. Again, it's not going to be, you know, things don't just go from multi-secular year lows straight up to new highs, you know. But 1250 is resistance. If we can put it in a higher low, or if we can consolidate this, then we can break through, and then 13 and 14 and so on. Copper is going to have a massive move here very soon. I just don't know which direction. I wish I could tell you. So I would just say here, defer to the weekly, which you have a bull inside bar on the weekly with volume. So I'm going to defer to the trend and say that it's going to be up. And how I know that there's going to be a move is if we just put in you put in some Bollinger Bands here and you show the width. I've showed you this before. So when you see here, when you're at this low end here, the bands are getting tight, that means volatility is coming, right? You can't stay in this tight range for this long. And look at how low that is, right? So see how the bands are coming in and collapsing? We're going to get a move. We're going to get a move. So I need to put the MAC on there. I mean, look at the 4 hour here. Look at how tight that is. So copper's moving this week. I would just give it the bias to up for now. Bitcoin got to almost all-time highs, and we did back off. So I was kind of expecting that, but as long as this base is here, so if you're bullish, which I am, you just want to see basing here, and then it can go higher. It's really simple. So 69 is short-term support. After that, about 66. If it continues lower after that, it would be like a yellow flag, depending on how things are going. Because you don't want to see it. You don't want to see a false breakout. I would probably still be a buyer though on a dip though. But we'll see. It might need a little bit more time. Weekly still looks fine. It's just got a lot of supply up there. Anybody who chased up here thinking that we were going to break out is underwater, so they're sellers. But monthly, man, what a close! Beautiful. And 75 after that. I think I had 83, 88, and then 93 were the levels. That's where I think it goes. So anyway, still think Bitcoin's fine. Anyways, yeah. So spiders here, good slice this week. Bears, bottom line, got to do some more damage here. You got to have realized volatility. Otherwise, we're going to see a lot of hedges start to decay in premium, and that can cause dealers to buy back stock. It can also cause those hedges to be closed, which is positive. So we're coming into a big period here. There's, a lot going on. The election appears to be like it's going to be close. The market's mostly priced in a Trump win, but that doesn't mean anything. It could take a while to figure out because America can't do an election. But anyway, and then the FOMC on Wednesday. Fed fund futures are pricing a 25 basis point cut. I think that's laughable, unless somehow they jawbone that 2-year down because it's getting too close for comfort. So anyways, guys, I'll wrap it up here. Again, you guys take care. Next week's video should be a lot of fun. I will see you guys all next week.